Hey, Bulls and Bears, we are back. My name is JJ. You're watching Bull, Boom, Bear, Bust, back with another dose of economic reality. Thank you for being here. I really, really appreciate it. Now, let's get into the top story here. First, let's talk about it. Bank of America, they're out with a dire warning. More specifically, the CEO, Brian Moynihan, we're going to talk about what he said and dissect it a little bit for you here. Now, a lot of you watched my previous video where I went to recycle. Thanks for those that commented on that. It was just a quick video. It was like less than 2 minutes. I was just putting out there how much you make from recycling, and I had 5 big barrels full of cans and bottles and plastic and cans both, and made like 30 something dollars, $33. So it was a lot of time saving up the bottles, keeping them on the property, and sometimes they attract ants, especially in the summertime, and all that for $30. It almost doesn't seem worth it. Now, a couple of you gave me some good ideas. One idea was give it to a homeless person, right? We see these homeless people walking around with carts. Give them a big bag full of bottles, and they'll probably gladly go recycle it if they're near a recycling center. Another idea was that someone else put in comments. If you have a teenager or a kid that's not old enough to work yet, let them do all the work, and if they're not old enough to drive, you'll still have to give them a drive to the recycling place. But some people put down, you're going to spend more in gas going back and forth to recycling than you're going to make in recycling. It's not quite that bad, but it's getting pretty bad, especially here in California. Actually, gas has come down a lot. We're down, I saw it at a $4.60 a gallon, which is actually low for California compared to the last year or so that we've seen $6 plus, even $7 plus gas in some places. All right, but let's get into this here. Bank of America, out of Daily Mail, this is the headline. Bank of America chief warns 2 more years of pain with high inflation and interest rates. Also, we've got more housing bubble shenanigans. We're going to get into that here next. But first of all, Brian Moynihan, he was on CNN this morning and basically warning about a 2-year recession. I think it's going to be much worse than just your typical recession, and I think it's going to be much longer than just 2 years. I think based on what we have seen previously, based on history, this economy could be in the doldrums for 4, 5, 6 years. And even then, what's going to make a recovery happen? Are they going to drop interest rates again? Are they going to do massive debt forgiveness, loan forgiveness? Maybe just a lot of bankruptcies will be filed, and people can start from scratch. What's going to happen? But here's the latest on the housing bubble shenanigans, and I told you here on this channel that I do not see a housing market crash. I said, yes, prices will go down, but I don't see a crash. A lot of you said I was wrong. Some of you said I was right. But here's the latest. In the attempt for the powers that be to try to keep home prices elevated, Fannie Mae and Freddie Mac are now going to back mortgages that are $1 million plus. And they basically increase the amount that they're going to back each year. But this year was a huge increase. Let me just give you an example, though. These are Freddie and Fannie backed mortgages. In 2015, the most they would have backed was $625,000. In 2019, it was $726,000. And it went up a little bit each year. I'm just skipping like 3 or 4 years at a time. Last year was $970,000. This year, Fannie and Freddie will back $1,089,300 mortgages. $1,089,300 mortgage. So that is a huge, huge mortgage. So obviously they're backstopping bigger mortgages, incentivizing people to go ahead and take out, or not so much people, incentivizing the lenders to go ahead and loan out more money because now they have the backstop of Fannie and Freddie. You see, when banks aren't accountable for their lending, when they can just get backed by the GSEs, the government-sponsored entities, then they're going to more easily and more willingly loan money out. See, if it weren't for shenanigans like this, the housing market would come down a lot faster and harder than it is. And that's why I always said from the beginning, I said, I don't see a housing crash. Yes, there'll be a correction because interest rates, mortgage rates basically doubled. There has to be some sort of correction, but not a housing market crash. Now, there was one point for a couple months I talked about how home prices wouldn't come down because I didn't think the Fed was going to raise mortgage rates. Well, obviously they did, and I'm glad they did. I just have such what's the word I'm looking for? I have so little faith in that institution. We're talking about the central bank. I have such little faith in them saying what they're actually going to do or doing what they actually say they're going to do that sometimes I think they're going to do just the opposite of what they say they're going to do. It's that bad. It's their history of calling markets and denying bubbles is so bad that I just tend to believe the opposite of what they say. In this case, they have stuck to their word on the increasing in the mortgage rates. But look at all the other shenanigans going on. We now have $1 million+ mortgage being backed by Fannie and Freddie, which is simply ridiculous with home prices where they're at now. But hey, if people are going to go out and buy $1 million+ home, then they must be in a decent enough financial position. But it makes you wonder if somebody's buying $1 million home, you think of a successful person. Then why do we have to have Fannie and Freddie, government-sponsored entities, backing these mortgages? Right? It's outrageous. What else are they going to do to keep this market, keep the housing market propped up? It's pretty amazing. But let's go on to the next story here. Consumer confidence dropped again, and we still have news programs, business news channels out there debating if there is or not a recession, but yet consumer confidence fell again here due to what? High inflation and rising interest rates. This one's out of MarketWatch. Consumer confidence index drops to 100.2 in November and foreshadows the trouble ahead. Well, all you have to do is ask most people, it's about 7 out of 10 people right now, that every month they're getting deeper and deeper and deeper into debt. Yet we saw record holiday spending. We're going to talk about Cyber Monday shopping here in just a minute. A closely followed index dropped 2 points from 102.2 the prior month. The non-conference board said Tuesday economists polled by Wall Street Journal had forecasted the index to fall to 100. So another drop in consumer confidence. People are just getting buried deeper in debt. So how can it not drop? But at the same time, you have news like this. Cyber Monday record hit 11.3 billion. Now that follows the 9 billion that we saw on Black Friday. So actually, Cyber Monday beat Black Friday shopping. Black Friday is typically the busiest shopping day of the year, but now that most sales are online, we see Cyber Monday, which has the online discounts and savings. We see that take over now, the top spot, taking over the spot of Black Friday. Thanks to deeper than expected discounts, Cyber Monday set new records, a 5.1% jump from 2021, and that was 10.7 billion in 2021. Wow. Thanksgiving Day was 5.3 billion. So add this up, people have spent over $25 billion just over the holiday shopping season. It's pretty mind-boggling, but when you look at the actually the shopping habits of people, when people see sales and discounts, they are more likely to go in debt and more willing to take on more debt. And it even talks about it right here. The record sales were underpinned by record discounts, with electronics, toys, and apparel leading the charge. Discounts on electronics were as high as 25% versus 8% in 2001. Now, we knew this was going to happen as far as the discounts because retailers are very overstocked. They have a lot of supply on hand, so we knew that they were going to use the holidays as a time to get rid of a lot of this and offer deep discounts. So I think what happened is a lot of people probably knew that they really shouldn't spend that much money. In fact, we just talked about a recent survey that most people were going to actually look to spend more and do what was called a holiday extravaganza, even though they knew that their budgets would not easily handle it. The survey that we talked about a few reports ago, most of those people said they were still going to go out and spend more and buy more for a holiday extravaganza because maybe they're stressed. A lot of people shop and spend money because of stress. It fills a void, right? And I've been guilty of it too. I've had times where I wasn't feeling the hottest, and nothing like a shopping spree to make you feel better, right? But yeah, these discounts attracted a lot more business. Toys had an average discount of 34%. It's interesting that they're still selling a lot of toys. Everything is like, as as far as my kids go, they just want to do everything on their tablets, on their iPads and their Kindles, and they don't really want a lot of toys. And I have to struggle to get them off these tablets and actually go outside and play. You know what I mean? All right, so there we go. Record Cyber Monday. What do you think about this, guys? Please let me know what you think down in comments with these debt levels. Are people making a big mistake doing these holiday extravaganza shopping sprees? All right, another report here. Tech layoffs approach Great Recession levels. Wow, and we're just getting started. We haven't seen the real pain even hit most consumers yet. Now, when you look at all the tech companies, all the layoffs, this year it's already been more than 60,000 job cuts and layoffs. Wow. By comparison, about 65,000 job cuts hit the tech industry in the years 2008 and 2009, which were the peak years of the Great Recession. And so here we are now, and we think that this is just getting started. And they haven't even really acknowledged that there's a recession yet. So yes, we're just getting started. We have to still get to the point where they're finally going to acknowledge the recession. Usually it has to get really, really bad before the mainstream pundits, I call it. Well, what's the proper word? The news anchors, the mainstream news anchors. It has to get really bad before they'll go out and announce the recession. Of course, it's not the anchors giving their own opinions. Usually they're given talking points on what to say. A lot of times they don't want to scare the people before or during the holiday shopping season by saying, yes, there's a recession. So I think that's a big part of what we're seeing here as far as the mainstream admitting reality, basically. Now let's compare this to the dot-com bust. The dot-com bust was primarily companies that didn't have really any earnings. Well, we're seeing a lot of that now. We're seeing a lot of companies very overvalued. I'm not going to say no earnings, but look at companies that boomed during the lockdowns and the health crisis shutdowns. Places like Carvana that allowed an easy way to buy online. Carvana, the last I looked, was down between 70 and 80%. It may be even worse. I haven't checked it in a while. But some of these online companies that specialize in just online without any brick and mortar stores really saw a big boom. Carvana, of course, they have these huge vending machines. I see one on the side of the freeway here in California. I believe it's just out of Escondido off the 15 freeway. They've got a huge vending machine, and they have those in a lot of cities. And that is a kind of a gimmicky kind of thing. I mean, maybe you could say they don't have to buy as big of a parking lot to park all the vehicles because now they can stack them up in this vending machine, this car vending machine. I think it's a gimmick, but you can make the argument that it saves space because you don't need as big of a lot. But it's a lot cheaper to buy a parking lot than build up this huge vending machine, from what I read, and the the breakdowns and the maintenance for getting the cars out of there, things like that. So yeah, kind of a gimmick. But yeah, a lot of companies. What's the other one? Peloton had a huge run up in 2020, 2021 with their price. We saw it crash back down. We see the tech companies crashing back down. Less people engaging online now. And I was going to say less people shopping online until these sales came out for the holidays. Are they the real numbers? We also have to ask that question. Could they possibly put out numbers that are not real to try to encourage people to go out and spend money? You see these numbers, all these $25+ billion spent over the holiday shopping season, and you say, hey, everybody else is doing it. Why not me? Is that a way for people to go out and encourage people to go out and spend more money? It could very well be. Another stock not doing so good is AMC. And still on the topic of layoffs, AMC Networks CEO steps down amid plans to lay off 20% of the U.S. workforce. Wow, another massive layoff. AMC, I mean, I don't know how they compete with streaming. I mean, streaming basically nailed these theaters. But look at what they're charging for popcorn. I mean, the last time I went, it was like $10 for a large popcorn. Ridiculous. So maybe they would have more people come into their theaters if they didn't try to price gouge people on all these snacks and popcorn. I think, back when I used to go to the movies, which is many years ago, I don't think I've seen a movie. I haven't seen a movie at the theater. Gosh, I'm thinking maybe 5 years. But even when I did go, I would put some, snacks in my pocket. I wouldn't want to spend that money at the snack shop for, a $5 Reese's peanut butter cup. It's ridiculous. So AMC layoffs, and I'm surprised we didn't hear about bigger layoffs from AMC before now, considering the cost of the movies and the snacks and everything. But yeah, streaming. I'm not sure why people would have been in AMC, but looking at the stock, the AMC stock here, it peaked out March 2021. AMC stock was almost $79. The latest here, just under $20. That's about a 75% drop in AMC stock. Now that's kind of been turned into a meme stock where a bunch of I think day traders over is it Reddit? A bunch of Reddit traders get into the stock and try to push the price up, and they try to manipulate it. But wow, anybody holding that for the long term that bought near the peak of nearly $80, you lost about 75% on your investment. So be careful out there, folks. We're going to wrap this one up here. What do you think about the Bank of America announcement? Prepare for 2 years of pain, is what Brian Moynihan said. What do you think about these holiday shopping numbers? Over 25 billion when you combine Thanksgiving, Black Friday, and Cyber Monday. Pretty amazing. So hopefully you're doing well. Hopefully you had fun shopping if you were one of the people shopping. But I hope you didn't shop yourself into a debt trap that you'll never be able to get out of. That's all I'm going to say about this one here. Thanks for watching, everybody. Be well. Keep stacking. Bye for now, and peace.